Hey, what's up, all of you beautiful subscribers? Welcome back to the Jack Chapple Show. So what's on the docket today? We're going to talk about this big cryptocurrency scandal where as much as $280 million got locked up. We're going to talk about this Apple milestone here. They hit a really big one. We're going to talk about Snapchat, some general Wall Street stuff. We're going to talk about Amazon, Lyft, some entrepreneurship stuff, some just general life stuff, and a bunch more. But let's jump right into this crypto story here. So someone deleted some code in a popular cryptocurrency wallet, and as much as $280 million in Ether, which is the Ethereum cryptocurrency, is locked up. So what does this mean? What happened? Like, what is this in English? Okay, so first of all, what is a cryptocurrency wallet? So the way that I can just kind of explain it is a cryptocurrency wallet would be like a bank in a sense, okay? And so you are allowed to open your own bank account at this bank, and you can essentially store money there, except in cryptocurrency, they only store transactional keys and IDs. They actually don't store any money or currency itself. But just think of a cryptocurrency wallet as essentially a bank, okay? And so this cryptocurrency wallet was called Parity, or is called Parity. And so you can go to Parity and you can essentially open up your own account there and store your crypto IDs, or it would be the equivalent of like your dollars, okay? And so what happened was one of the users that uses this bank or this wallet accidentally triggered a flaw with an update to Parity's multi-signature wallets, according to open source wallet maker, which cut off all access to the funds they contained. And so about $280 million got locked up solely because someone accidentally triggered an update. And now this is scary. This is scary stuff. If you have an account with them, you are not able to access your money, or you may not be able to. Some people might, but this is $280 million we're talking about here. Minimum 150, maximum $280 million. And think about this. This is just another thing like I don't like about crypto. Now, obviously, crypto's been doing really well. It's been growing. It's been net positive this year for sure in terms of growth and getting into the public eye. But this is this kind of stuff that scares me too. Like, what if this was, I put a lot of my money in this, and it's like, imagine if your bank account got frozen, and it's not because of the bank thought that someone stole your account or fraud or was using your cards or whatever. It just froze because someone on their own bank account tried to update it, and now yours is frozen, and they don't know when they'll be able to let you have access to your money. It might be gone. It's probably not going to be gone, but it might be. Imagine that happening to you, and you might be affected. I know a lot of crypto people have started watching this channel because they like it when I do talk about crypto, every few videos. But I mean, this is it's a scary thing. It's a really scary thing. Now, in the grand scheme of things, like if this had happened 5 years ago, this might have been and it happened to like the only wallet for Bitcoin or Ethereum out there, this might have been the death of cryptocurrency if this happened. But because, crypto's $100 billion market cap right now, or more than that. This is just kind of a drop in the bucket, but it's still a lot of money we're talking about here. So, just kind of. That's my thoughts on it. This is it's tough. Like, we have all these scandals that come out that someone was able to hack it, or there was a leak, or some exchange got hacked, or now this wallet had a major flaw in it. This is stuff that you don't see with traditional currencies, and I guess that this is part of the learning curve that goes with crypto, right? If you have a new technology, a new blockchain technology, there's going to be mess ups like this, and it's not perfect when you start, but. Anyways, I just had to talk about that story. I'll keep you updated. There's still we still don't have all the information, like what specifically caused it. What's the timeline going to be here? Apparently, it needs something called a hard fork, so people need to go in and like reset everything, and it's going to be tough. But I'll keep you guys updated on that if it gets resolved. Let's move on to this Apple story here. So, remember earlier in the year I talked about this, about how Apple might become the first $1 trillion company within the next 2 years? Well, it might happen in like a month and a half. And so Apple is now at a $915 billion, $903 billion market cap, meaning that the value of Apple is $903 billion. And it's closing in on the magic $1 trillion number here. And so what this means also is that, I was talking about how Saudi Aramco might become the first publicly traded $1 trillion company if it IPOs properly next year sometime. But Apple might just take that crown itself. Apple might just grow to $1 trillion company. Think about this, $175 per share. They have however many shares are out. I mean, they're worth $903 billion. And I always like to think about, like, go back to Steve Wozniak and Steve Jobs in that garage, and go back to, did they think that they would become not only $1 billion company, $1 trillion company? $1 trillion. I mean, they could, if you were to sell Apple, I mean, think about this. Everyone talks about how the national debt of the United States is not going to be able to get paid back. It's $18 trillion or something right now. And I mean, Apple can put actually a decent, if they were to obviously sell off everything, it's not going to happen, obviously, but if Apple were to get sold off for all of its assets, all of its stock, it could put a major dent into the national debt. How crazy is that? And this is a big private company, or I mean public company, but just not owned by the government, I mean. Kind of crazy. I just thought I had to update you guys on that. So what do you guys think about the Apple as a stock going into the future here? I mean, they seem to just keep releasing new stuff, and they keep beating earnings. They keep stockpiling their cash, and I mean, they've been doing this for essentially ever. I mean, look at their downturns here. Their downturn was in 2012 here. I was able to capitalize on that around 2013, 2014, made some good money. And then, I mean, they've been one of the most consistently good companies over the past 50 years. And it's, do you think that they're going to be good going into the next few months, next year? Even during a recession, do you think Apple will be okay? Temporarily, do you think that here's my question to you, do you think that they will become $1 trillion company within the next 3 months? And do you think that they will become $1 trillion company before the next recession, which probably will happen by the end of next year? Do you think that that'll happen? Let me know in the comments down below. I think that, I mean, right now they're on pace to do it, but I mean, what we saw with Amazon and Google, remember Amazon and Google hit the $1,000 share price, right? And everyone was talking about how great of a company they were, and they were going to go up to $1,200 really soon, and they were going to surpass Apple really soon. Well, what we saw was those stocks took a downturn over the next 2 months. And I think Apple might be in that category of they're probably going to slow down a little bit. Maybe, I don't really know. But the thing is, though, is that they're going to always have good holiday sales, right? They have that every year, and the stock usually takes a bump. I mean, look at this here. When they released their quarter 4 earnings, I'm guessing January 31st this year, their stock jumped 7% in essentially one day, in a week. So we might see that again. And a 7% jump would put them close to $1 trillion valued company. So I don't know. We're going to see what happens. I'll keep an eye on that. Let's talk about Snapchat. Let's move on here. Snapchat, so they're getting beat up again. They announced a bunch of stuff, and Wall Street was not impressed. Earnings were, they just weren't impressed with anything. So Snapchat down 16% today. So they've had poor financial results. They're blasting. They got downgraded today. So most people, or a bunch of big financial institutions, rated them as a buy, and now they downgraded them to a hold. And so they don't know what's going to happen with Snapchat here. Excuse me. So share price currently sitting at $12.82, which is, it's not, I mean, like, look at this. 3 months ago in August, they were at $11, right? I think that they were lower, weren't they at, I thought that they were lower than that at some point, but I guess not. So yeah, they're down 15% today, and that's a big hit. I mean, that's obviously a big hit. Now, what I really want to talk about is not the stock itself, but the company itself. And so Evan Spiegel, who is the CEO, he hopes to save Snapchat with an algorithmic feed. And so what he's kind of doing, in a sense, is making a news feed for Snapchat in a way. Now, I don't use Snapchat. I've tried it. I just didn't find it useful. I didn't really care enough to use it. And so that's what he's trying to do, so that people can kind of, apparently right now on Snapchat, like, it doesn't really, sort the people you follow in terms of like seeing that your friends first, who your best friends first, and then, you know, your friend of a friend of a friend of a friend. It doesn't really sort it like that. You know, on Facebook, you know, your best friends and the people that you interact with most, they're at the top. They're at the very top, and they pop up first, like, oh, your friend Emily, who you've known for 15 years, it got tagged in a photo. That's going to get put on top versus someone's status update for someone who you went to one class with and messaged once, right? And so Snapchat's going to do something like that. They're going to have some sort of news feed, and it might, he even said it might temporarily hurt Snapchat, but in the long run, he thinks that it might be a big feature which could help grow the platform. And this is a big thing. this is a big thing where it's going to help. I think it's going to help in the long term there, or it might not actually, but this is what I'm trying to say here is that months and months and months ago, I was saying that they need a feature to at least innovate a little bit or differentiate themselves a little bit. This kind of at least puts them on a similar level to that of Instagram and Facebook. Now it's not even close to the same platform. It's still not even close to as good, but it's getting there, right? Having essentially a newsfeed for Snapchat, that could be really cool. And I mean, we'll see what happens. Wall Street doesn't like this. Wall Street doesn't care. Wall Street doesn't like this idea. Who knows what's going to happen with the users? I don't really know. So they had 2.9% user growth, which is still, I mean, that's not great for social media, but I mean, it's okay. They still added millions of daily active users. But we're kind of seeing a plateau here. We're seeing a plateau, and they need to get that next feature to put them on the next level. And they need to make some money too, because they're at that point where they do need to make money soon or innovate, or they're going to die. They're going to need to shut down, like Twitter had to shut down Vine, because obviously Vine couldn't. Trouble with Vine is people saying the death of Vine was making 30-second videos, or the video's 20 seconds long, or instead of just 6 or 7 seconds, whatever it was. Well, I mean, the death of Vine was that they couldn't put up videos long enough. They should have put up They should have essentially just put it into their own version of YouTube, in a way, because advertisers don't really care. They can't put out an advertisement on a 5-second video, right? Unless it's a display ad. They can't put out their own 5-second ad. That's not going to get your story across. No one's going to watch it. But people are willing to watch, a 5 to 15 to 30 second ad if it means that they can watch a 15-minute PewDiePie video. They're not going to watch a 30-second ad or a 15-second ad for a video that's 5 to 6, 7 seconds long. And so Vine didn't innovate fast enough, and I mean, they died, and we're going to see what happens with Snapchat. They're trying something. We're going to see if it works. We'll keep an eye on it, and I mean, I always wish the best for any company out there, because I know what it's like to run a company, and I never wish failure on any moral company. So Snapchat seems like it's good, and the CEO seems like a good guy. Anyways, we're going to move on to Kroger. So this is just interesting. So I want to talk about competition here. I want to talk about competition and something that I had to face. So remember 4 months ago in my vlogs, I was talking about the database that I was using to store information on my website. There's a database, and I said exclusively how Amazon was probably, the best or second best product out there, but I didn't want to use them just in case my company were to grow to the point where I'd be competitive with them in some sort of way, right? If it's $10 million company, $100 million, $1 billion company, whatever it may be in the future, I didn't want to have to transition my entire database away from Amazon just because they're a competitor and would have control over my user information if they really wanted to. I mean, if their system went down or they would close it off, I would be dead, right? So apparently this has been happening the past year with giant companies. So Kroger, they're like a food and drug, they're a grocery drugstore kind of deal in the United States. They're not in Canada. But they faced this problem, and they publicly said this. So they said, for obvious reasons, competitively, it doesn't make sense for us to do a ton of help to grow that business for them. And seriously, I agree with that 100%. And now this has been happening for other companies too. I mean, Walmart and Target have been doing that too, going away from any Amazon product. And I understand it. You don't want to. Now, remember a week ago, I was talking about the biggest cloud platforms out there in terms of cloud database and cloud computing. Excuse me. So this isn't accounting for just normal databases. This is specifically cloud, which is a whole different thing. Amazon takes up 34% of the market. They own that market. And that is actually the reason why Amazon's profitable right now. People don't realize this. Amazon, their shipping does not make them profitable. They actually lose money on their e-commerce website. They lose money from that. The reason why they are profitable is because of Amazon Web Services. They got people using their database and paying fees to essentially host someone's website. And so they own 34% of that market. And it's very, very profitable. If you set up the infrastructure, you can scale it up, and it's very, very profitable. And so they own 34% of the market. Microsoft Azure owns 12%, IBM 8%, Google 6%, Salesforce. Oh yeah, Salesforce. They just opened a giant tower in where is it? California. They opened the tallest building in California or something. I heard that recently, but I didn't even know what company they were until a few weeks ago. Anyways, so this is just kind of a big deal because big companies are moving away from Amazon, and we're seeing this branching out from these old companies. Some of them are adapting well. Some of them are going purely online and doing the deliveries. We're seeing this from Walmart. We're seeing this from Target a little bit. Kroger's joining the likes. We're seeing this from Nike. We're seeing this from those big companies. They're willing to adapt, and they don't want to help Amazon. We're seeing a kind of a lashing out at Amazon. But Amazon, what it is it's Microsoft in the 1990s. Remember Microsoft in the 1990s? They were considered a monopoly. They kind of had to split up some parts of their company so that they wouldn't be considered a monopoly. And I mean, they just own the market for e-commerce right now. They own the market for any sales, period, which is a big market. And this was Microsoft owning software in the 90s, right? And so what I think we're going to see is we're starting to see this lashing, this retaliation from everyone else. We're seeing big companies like Walmart, doing what Apple did in the 90s, being like, you know what, we're going to just do our own thing. We're not going to use you. We'll work with you a tiny bit, but we're going to do our own thing. We're going to launch our own platform, and we're going to build our own software. We're going to build our own hardware. And that's what we're seeing from these companies here. Now Apple's more valuable than Microsoft, right? And so we're going to see, who knows how long Amazon will be one of the top 5 most valuable companies in the world. Who knows, right? They might be the most valuable company in the world one day. I don't really know. But history would say that tech companies are very volatile for the most part. The only ones that have really stuck around through history are Nintendo and IBM. In the past 100 years. And in the past 50 years, it's been Microsoft and Apple and a handful of others. And so we're going to see someone overtake Amazon eventually, I think, even in the e-commerce space. Someone's going to take it over eventually with some weird innovation. That's just kind of what happens. But it's not going to be anytime soon. Not going to be in the next 2 years, not in the next 5, maybe not in the next 10. But it just happens. Someone comes up with a better idea, better technology, and they're going to surpass Amazon. But anyways, that's a whole side tangent there. We're going to move on here to this big story here. So we're going to talk about Call of Duty because, I was a big gamer. I used to play Call of Duty all the time, and I was really, really good at it. But what's big here is that for business is that they had a $500 million first 3 days. They released a game and made $500 million in sales. That is crazy, by the way. $500 million for this video game, and it's the game, it got good reviews. It's not supposed to be a transformative or amazing or anything, but it's supposed to be a really good game, a new Call of Duty game. Everyone is talking about it. Yeah, it's probably going to be one of the top selling video games of all time, if not the top selling one, based on its first weekend. So I just thought that was a big business thing. So we're going to actually, is there an Activision stock here? Does this take us to the stock here? So as a result, Activision, so the people who made the game, their stock's up almost 6% today. And where's the market cap here? I usually don't like using CNBCs here, but is there a market cap? Oh, please. Okay. So the market cap of this video game company is almost $50 billion. And it improved at several $1 billion today just after the sales. And it just really, think about this. Think about going back 20, 30 years and saying that there are going to be multiple video game companies worth more than $10 billion, like EA, Activision, Blizzard. I'm sure that there's tons more out there, right? But worth billions of dollars. And it's not Atari, right? It's not, I guess, Nintendo. Nintendo's in there too, right? Nintendo's mainly a video game company. Sony isn't, Microsoft, Xbox isn't. But it's really cool. It's really cool to see these big video games coming out here. And have you guys played this game? Did you guys buy it? I know a lot of you are fairly, you're millennials like me, and you guys might have bought this. And what do you guys think of the game? I heard it's good, and they brought back Nazi zombies, by the way. There was a game mode I used to play in elementary school and high school where if you don't play Call of Duty, essentially it's just a first-person shooter game. You get to go kill other people online. But there's this game mode where you get to partner up with people and your friends at your house or whatever, and you have to try to survive against these swarms of Nazi zombies. That's what they are there. undead German soldiers that were Nazis, and you have to kill as many as you can with special weapons and stay in this house and you're trapped in. It's really, really cool. I used to love that and play that a ton, and they brought it back apparently in this game, so maybe that's why people have bought it. I don't know. Anyways, let's move on here quickly to there's some worry about tax reform, about how the Republicans aren't going to be able to pass the tax reform. It's getting delayed and delayed and delayed, and people are starting to get worried there's going to be no tax reform. And, I saw this article saying how the reason why it's not getting passed is because of this one hidden tax here. And I don't think that that's true. I think it's not getting passed for a bunch of other stuff, but currently at this very second. But this is one of the reasons. So, Trump has said, and the Republicans have always been saying, it's the biggest tax cut in history, which, it pretty much is for most tax brackets, except for the top one. Except for the top one and, kind of the bottom one. I'll get to that in a second here. But, Trump's been touting about how the corporate tax rate's going down from 35% to 20%. I'm kind of a fan of that. I'm more positive towards that than negative, because I'm a business owner and that's really good for me. Even though I'm not in the United States, I'm just saying if I were to live in the United States, I'd like it. And they're dropping taxes for middle-class families. They're dropping taxes for people that make between $400,000 and $1 million. And now there was some backlash from Democrats because they were saying how the bottom tax bracket, so people that make $25,000 or less personally a year, their tax bracket is going from 10% to 12%. But that's not really the case because they're getting giant deductions with it where they will probably go from paying 10% tax to 0, most likely. Some people will pay an additional 2%, yes. Most will go from paying 10 to 0 if you're making $25,000 or less or in that bracket, right? I think that's the number. But so it's a giant tax break across the board, except for this. There's a hidden one that they haven't been talking about here. And it's really interesting because I haven't even heard about this until today, until someone came out and said, wait a second, it's not getting passed because they haven't been telling people about this. So 39.6% is the top tax bracket right now in the United States. Trump said that would not change or might go down 4%. It'd be relatively unchanged for the most part. It'd either stay the same or go down a little bit. But what they weren't saying was that there's a surcharge from people that make $1 million plus to, I'll have to get through this here, but they're charging an additional 6% tax on people that make more than $1 million per year. And it's up, they're going to charge a 6% tax up until the point where they repay, I don't know, it's up to, I think it's like 40 grand or something in additional tax money. And then it drops back down to 39.6%. And so it's really hard to kind of explain this here, but pretty much what they are doing is they're trying to recoup the money that they will lose from the giving giant deductions to people that are very poor. And so they're doing it by having the sneaky little tax in here. And I mean, in Canada, the top tax rate is like 50 something percent. It's like 56%. And when you include sales taxes and all that stuff, I mean, it's like 70+%. And if you include corporate taxes, I mean, you're not making money, period. I mean, people don't really realize that if you have a corporation in Canada and you're in the top tax bracket, you're paying 70+% of your income to the government. And I mean, and that's pretty high, right? Because you get double taxed. People don't realize this. When you own a company and you want to pay yourself, you get taxed the corporate tax, and then you get taxed your personal tax. And so that's why people like to have as many assets in the company as possible that they get to use personally, right? Anyways, so pretty much what do I think of this? So about the rate going up 6% for people that make between $1 and $1.2 million a year. Honestly, that's a lot of money. It's 60 grand out of the pocket of millionaires or multi-millionaires. If they're making $1 million a year, they're probably worth over $10 million. And I mean, this is one of those cases where I'm kind of okay with it. I'm kind of okay with it because it only affects the top 0.1% of individuals. Now, I'm not one of those people. I mean, I love people who make money. I'm very pro capitalism. I'm pro, if someone makes $1 million a year, I'm not against that whatsoever. But this is one of those cases where it's just kind of like, okay, like 60 grand for someone that makes 1.2 million a year. I mean, it's a lot of money to them. And I mean, I here's what I'll say. I'll understand it. I understand it. I'm not for it. I'm not against it. I understand this. I'll just stay out of this one. But yeah, it's just a sneaky tax, and people are saying that that's one of the reasons why the bill's not going to go through here. So what do you guys think of this? What do you guys think about this? So, and just remember, so people that make $1 million a year, they will get taxed at 46% roughly from $1 million to, $1.3 million or $1.2 million or $1.4 million. And then after that $1.4 million of income is hit, it gets dropped down again. And so that's what it is. It's really strange. People are going to have their, people that make $1 million a year or more, they're going to have to hire accountants for this stuff. They're trying to make the tax code a lot more simple, and this is just something that doesn't make it simple. It makes it a little bit more difficult because a sneaky surcharge in there now. Anyways, so I like the subtitle here. If you're rich enough, some of your income is taxed at a rate unseen since the 1980s. Honestly, that's okay. I'm okay with that. I'm not for or against it, but I'm okay with it. What do you guys think? Let me know in the comments down below. Let's move on here to this. Oh yeah, so Amazon here. Amazon, remember the Amazon key thing, which I've been talking about here? I'm not going to be one of the first people to use it, but I'll keep an eye on it, kind of deal. And if it works out, then Apple market cap closes above 900 billion. But if Amazon key is proven to be safe and good, I might use it in the future. Who knows? But pretty much the first delivery was made. This is loud. Amazon in-home delivery is here. And yeah, so the first time it happened, this is all obviously set up too. This was set up by Amazon, and Amazon said, hey, could I record this here? We're going to set up this in your house for free. But it happened. It happened for the first time, and Amazon Key is now available to Prime members in 37 cities and surrounding areas across the U.S., and we got a first look. So, what do I think of this? Here's what I'll say about Amazon is that they are probably the best company of all time at rolling out new innovations faster than anyone else. They go from idea to publicity to launch in less than a year sometimes. In this one, it went from publicity to launch in essentially a few months. So, it's cool. It's cool that what they're doing. I don't know. We'll see what happens. We're going to hear stories about dogs biting mailmen and all that stuff, and Amazon package people. Oh yeah, by the way, what I did like about this video was that they used a real Amazon employee. Okay, so they used a real Amazon employee, and it's not some delicate 100-pound, 5'7" supermodel female like they used in all of their videos. They sent in an old, relatively old, looks like he's in his 50s, a 50-year-old kind of bulky, strong delivery person. And it's just really funny because I ripped on them for that in their marketing videos. Most of these people who are going to be delivering packages are going to be 200-pound male guys, right? They're not going to be delicate little not intimidating females. They're going to be relatively big men for the most part here, because that's who delivers stuff. And I just thought that was really funny for the most part. Anyways, let's move on here to Apple here. So I just want to get over this quickly here. I want to talk about 2 or 3 more things more important. So Apple is going to launch its AR headset in 2019. I just wanted to talk about not necessarily this, but more of what happened to AR, to augmented reality, all those headsets, all those Oculus Rift, and people thought that this was going to be big by 2017, and it's not. People just don't like them, and I'm just curious as to why. I've got the privilege to try. What is it? It wasn't Oculus. It's the one where you set it up in the entire room. What is it called? Oh my god, what is it called? It's VR gaming. Oh my god, it's not the Sony one. It's not Sony. This is gonna really bug me here. If I don't find it in the next 10 seconds, I'll probably just move on here. VR gaming systems. If this doesn't find it, then I'll just move on here. Wearable PC Mag, best VR headsets, HTC Vive. That's it. HTC Vive is what I got to play. And I gotta tell you, that was the most immersive gaming experience I've ever had. And everything, I mean, I got so into the game. It was like I was shooting space aliens, and it was all in like 4K essentially resolution. And it was all, I mean, I could see myself like really getting into that. I promised my dad, actually one of the promises I made to my dad, and now I have enough money to do it, so I'll probably do it this year, is that I made a promise to my dad, I think 2 years ago, because I didn't have enough money. I was just recovering from getting sick. But I said, he's fully paralyzed. He doesn't get to go outside. He doesn't, he's just essentially locked up in his room. But I'm going to buy him, something like an HTC Vive or a VR headset so that he can, kind of experience motion again, from his chair, essentially, from his wheelchair. And that's something I promised. And it's just really, I mean, it's kind of far, because 2 years ago, I didn't have enough money for things, and I just recovered from my sickness. I had thousands of dollars saved up in university, like a lot, but then I got really sick, and I had to blow through all of it to live and pay for drugs and all that, if you don't know my story. So, and so it's cool that I'll be able to do something like that this year, and I guess we'll see. We'll see if I'll get him that or something else that could be VR or something else that's cool. I don't really know. I think that what he wants me to do is just to keep putting all my money into growing the company. That's seriously what he wants me to do. But I'll get him something. I'll probably get him VR. But I don't know. I don't know. Just kind of cool. Like I promised that I'd buy him one of those things, and now I'm in a position where I can, so it's really nice. That's one of the things which you don't really get to talk about too much, or not get talked about too much. But when you gain money, I talk about this in the Wealth Accelerator program, is that one of the reasons why I wanted to make money is to kind of take care of everyone else around me, so that they don't have to. I mean, my mom's, she's had to take care of the entire family since my dad became paralyzed for about a decade now, since I was a kid. And she's been working too much, and like I just want her to not have to work anymore. I want my dad to kind of get to experience the best care and be able to go outside and have, our house isn't completely wheelchair accessible. He still has to. It is in a lot of places, but it's not. And I'd like to be able to kind of take care of my family for the most part. So that's one of the reasons why I want to make some money, is just kind of take care of everyone else around me. I don't know if it is for you, but that's one of the reasons for me. So. Let's move on here to Fox. Fox is in talks to sell most of its company to Disney. And so there was talks about that. This came out about a week ago, I think, or a few weeks ago. It might be halted because the FCC, there's regulations that state Disney cannot own more than one, national major channel, I guess. So Disney owns ESPN. People don't know this. Disney owns ESPN, and so if they were to buy Fox, all of a sudden they're going to own ESPN and Fox. Fox owns a ton of sports content, and so it would be anti-competitive for them to own all of this sports programming. And so that's what's holding back this deal for regulation purposes. Now, who knows? There's still some money issues to sort out too, but this could be something that prevents the sale from happening. Maybe if Disney buys Fox, they'll have to give up some of their sports rights for the Fox programming. Anyways, it's really interesting how government's stepping in there to kind of prevent this. I didn't even think about this when I heard of it. Yeah, but they're not allowed to own more than two major kind of sports channels in a sense. Fox is obviously news and political stuff and other programming, but they do sports too. So let's move on here to Lyft. Lyft is testing a new rider experience with a small percentage of users. So again, I've seen a lot of innovations coming out of Lyft recently. I've been talking about them a lot. They're catching up to Uber, man. They're really catching up. And so 1% of its riders will use a different user interface, I guess, and have a different experience, and they'll be able to collect information better and use that information to better the experience for its users. Kind of like what Facebook did. Remember, Facebook started kind of collecting data in like 2008. And then all of a sudden they pumped out some ad stuff, and then they pumped out some algorithm stuff. So it's like, hey, you might like this. You might do this. And Lyft is kind of going that route in a sense, that they're just going to be using that information to find preferences and maybe use that data and sell it for profits. Who really knows? I don't really know. But that's some big news coming out of Lyft. And the last thing I want to end off with is kind of personal life stuff. Not personal, but so Roy Halladay. If you don't know who he is, Roy Halladay, big picture in the major leagues of baseball. He probably the best pitcher from 2004 to 2007. Hall of Famer, Cy Young winner, award winner, all that stuff. Retired a few years ago. He's 40 years old. He recently, I think yesterday, he passed away in a plane crash. He rode a single. He was a pilot. He had a single seat plane. He had a double seat plane. He was the only person in his single seat one, and it crashed over the Gulf of Mexico. There was no mayday calls, and he unfortunately passed away. And this is a big one for me because he, Roy Halladay, he's one of those like childhood people I looked up to. Like he's one of the 2 reasons why I started watching baseball, or one of the 3 reasons. It was I liked Roy Halladay, I liked Barry Bonds, and I liked Jose Bautista. Jose Bautista came after he really got me involved in Toronto sports, but Roy Halladay was a big one, and it just kind of shows you like how, I mean, this guy, 40 years old, so relatively young, healthy, and it shows you like how quick life can just be erased like that. And you really gotta value every single second you got, because I've had health problems up the yin yang for the past 3 years, and I know how short life can be, and my life's probably going to be shorter. I mean, I always said I'm probably gonna die in like 14 years. I always said like probably 37 to 40 years old from health problems, and like I only give myself that timeline or even less, and I try to live every day. I appreciate every breath. And so when people get sad and lost and all this stuff, and they get down because some coworker made some mean comment towards them, I'm like, look, you get to move around, you get to breathe, you get to go to sleep at night and not have to worry about dying in your sleep. I had to go through that for an entire year. Every night, I mean, there was probably 10 times where I woke up and I was having an anaphylactic reaction and I could not breathe. And I had to go through with that fear for an entire year, and kidney failures and heart problems, and I mean, so much stuff, and cancer scares, and it was all terrible. And that's what I worry about, right? I don't worry about like Sally saying something mean about me at the office, or people caring about how I look, right? You gotta appreciate every breath you got. You gotta appreciate your health, and because it can get taken away in a second, and then you'll look back and be like, oh man, I should have appreciated it more. So that's my message to you guys. Gotta live every day, just every breath. Like sometimes I walk outside, like I walked outside today, it's freezing cold. It's -3 Celsius here today, or -2. I walked out and I'm like, man, it's just the fact that I get to feel this on my skin and face and get to breathe this air. I mean, it's special. Like just because it's cold doesn't mean it's bad weather. I mean, the fact that I get to experience the weather means it's good. So that's my opinion on that. And so Roy Halladay, he unfortunately passed away, 40 years old, one of my childhood athlete heroes. And I just wanted to talk about that. Just whatever you want to do with your life, just do it now. Start doing it now. All right. If you want to start that business, start it now. If you want to go to Cuba, like do it as soon as possible. Okay. Like you don't have to start a business. I know a lot of you do, but if you want to just, make 40 grand a year and go live in Cuba and go to all the baseball practices, like go do it. Just live life how you want. Life's too short to live your life how you think, others want you to. And if your parents want you to be a doctor, like screw it. Don't. All right, go do whatever you want. And I mean, these past few years have taught me a lot, and it's just sad. I mean, Chester Bennington, he passed away unfortunately earlier this year. He was part of my favorite band from grade 4, like Linkin Park. And Roy Halladay was my favorite pitcher in grade 4. So I mean, grade 4 is kind of dying off for me right now. It's kind of sad a little bit. So this isn't supposed to be a negative one. It's just supposed to be a positive. And one of the things, here's the other thing too about legacy. So Roy Halladay, the one thing I noticed is that everyone said after he passed away, he was probably the nicest guy they'd ever met. Like not in the exaggeration way, but in terms of like, he was just a good guy. He would never talk bad about anyone. He baseball, you know, he'd never be so competitive or make fun of everyone or anything. Like, he was just show up to work every day, be the hardest worker there, and treat everyone with respect. And leaving a legacy like that is so important to me. And that's what you guys should think about too. Do you guys want to leave that legacy, or do you want to be like, I want my name to be in Wikipedia as being like nicest guy ever, right? My description in Wikipedia, like, Jack Chapple was the nicest guy of all time. I'd love that. That's kind of what I want to do. So anyways, let me know in the comments down below what you want your legacy to be. Like, what do you want to be known as? Do you want to be known as the nicest guy ever? Do you want to be known as changing the world in tech? Do you want to be known as being a good dad, a good husband, good wife, whatever it is, a good parent? Let me know in the comments down below. For now, that's going to wrap this video up. So I'd like to thank you very much for watching. You're all very beautiful people, and I'll see you guys in the next video.